be an optimist. And these are all quotes from Jonathan. Every morning, billions of people around the world wake up trying to figure out how they can make their life better. Buying stocks is a way to profit from that energy and dynamism. Now,
One of the things,
Jonathan,
one of the things I emphasize to people all the time is that investing in the stock market is an asymmetrical bet. In other words, if the world continues to prosper, stocks will continue to prosper. The global economy will grow, earnings will go up, and stocks will rise to reflect it. If everything goes to hell in a handbasket, it won't matter what you own unless you own, say, canned goods, ammo, and a very fine wine cellar. So if you're investing, it pays to be an optimist. You should be invested in the stock market because that is where the action is going to be. And if it doesn't pan out, well, it's not going to pan out for anybody else. Nobody's going to want your American Eagle coins when everything goes goes into the dumpster. They're not going to want your bonds. They're not going to want your cash investments. Buy stocks. If I have one piece of advice for people starting out in the financial markets, is buy a diversified portfolio of stocks and stick with it for the long haul.
so here's the challenge, Jonathan. Of course, you wrote over 1,000 columns for the Wall Street Journal, and there was writers sitting probably beside you writing about all of the bad things that were going on each and every day. So how do you keep that optimistic perspective given all of these bad things that are going on each and every year? This year, it seems quite minor so far with the tariff situation. Of course, now we have this new Israel-Iran conflict, but there's something each and every year that challenges investors, and the daily news is very, very negative. It's definitely tilted that way.
Yeah, the media definitely, tilts negative on the news, but look at that chart. Which way does it head up over time? It heads upward. You can see which way the wind is blowing. Just look at that chart. You want to be on that upward rising roller coaster. And as for the, whatever the event of the day is that's scaring people, it's in the end, you know, the characters are different, the plot is different, the storyline is different, but essentially it is indeed the same narrative. It's like something bad is happening in the world and you ought to panic. And the answer is no, you shouldn't be panicking. You should hold tight. This is what risk looks like. And if you want to be rewarded, then you have to hang tight during those periods that seem risky.
Yeah, and Peter, this is what you often come back to is thinking about earnings, and in the long run, earnings are all that matters. But why should people expect earnings to be higher 20 years from now, 30 years from now? If you're a long-term investor, you're feeling optimistic about the future. What gives you confidence that earnings will be higher and therefore the stock market as a whole will be higher as well?
I mean, the key is to say the stock market as a whole. So if you pick out one company and say, do you have a high degree of confidence that 30 years from now their earnings will be higher and their stock price will be up? The answer is no. You can't have a lot of certainty around one stock that's like, maybe within 10 miles of you, there might be 100 restaurants. I'm not putting all my eggs in one basket that one of those restaurants, no matter how good it is going to be doing great 30 years from now. Think about 30 years ago, all the restaurants in your neighborhood. But if you were to ask me, do I think there will be restaurants and that they will be charging more and making more 30 years from now than they are today? Well, that's an easy bet to take. And that's basically the market. Inflation's a very big part of this. We expect the price of everything that we do, from an airline ticket to a hotel room to a cheeseburger. We expect the price to be higher 10, 20, 30 years from now. That's a significant component of this on top of just the natural economic expansion.